softly leave, and it's me you'll need to show. How deep is your love? I really need to learn.
Good day, and welcome to your short vol show today.
Breaking us down.
My name is David Lincoln, and we have a market in flux today. By that I mean the market is kind of all over the place a little bit here. We've seen the Vix up quite a bit today as I pull up the screens to check out. Also in the news, the FBI agent Peter Strzok was fired by the FBI today. This after he testified before Congress. What was it, like a few weeks ago? Also, Omarosa book release news. Omarosa has a tell-all book about the White House coming out, and some more of this kind of like White House type drama stuff going on here today. So here we have, I finally have my screens loaded here. So the VIX trading 1448, and the front month future now actually has actually rebounded so that it is above the VIX cash. For a second, the futures were actually below the VIX cash. Let me see if I can pull up VIX Central. It will have, it's a little bit delayed, so it will probably show what we were seeing before. Nope, it's kind of like right now we've got sort of the front month future is the exact same price as the cash. Now, the amount that these ETPs, the VXX, UVXY, these VIX exchange traded funds, the amount that they are being that they're decaying to the downside is reduced today. Last time I checked, it was around 5%. Now it's down to 3.91%. And when we look, now at this point in time, as we get closer to expiration, the most ETPs are, well, they're composed mostly of the SEP future now. So this August future, you can see there's no room for it to decay because it's actually the exact same price right now as the as spot. But this area, which I'm going to draw here, I could say we're maybe like here in the cycle right now. And so this distance here between the futures curve and spot, that's the potential decay that we have available to us. And it's gotten much reduced, which is typical for what happens when we get a vol spike. Now, the VIX is up, like I said, quite a bit, but the futures lag far behind it. So you're not going to see, even though you see the VIX up 0.23, you're not going to see a UVXY up over a point. Or, you would think, some people might think, well, okay, 1.5 times the VIX is what you should expect for UVXY, so it should be up at least $1. Well, not really, because the UVXY is based mostly at this point on the September future, and the September future is only up 27 cents. So you see UVXY performing very badly compared with the VIX today, and this is all due to the term structure absorbing the whole move. So instead of the SEP future really going up a lot, what's happening is the spot is just getting pulled up. All that space between spot and the SEP future is kind of shrinking, and so as the VIX goes up, the future goes up much less. So if my hand here was the VIX spot and this was the future, VIX spot's going up like this, and the future is just slightly going up. And of course, UVXY and VXX are based on the future, not on spot. So even though spot moves up a lot, because the future only moves up a little bit, UVXY and VXX only move up a little bit. So VXX up a point today so far, and UVXY up 48 cents. We did have positive E-minis earlier today, but they've turned decidedly negative now. Facebook seems to be holding in there quite well. Tesla has had quite a range today already, really on the opening and right before the opening, ripping up towards 368 before kind of settling back down. And as far as other things in the news, let's take a look at Drudge Report for a second. I'm trying out, you can see in the background Avid. I'm trying to learn Avid. I usually edit in Sony Vegas Pro or Adobe Premiere Pro, but Avid is one of the professional standards. Well, it's as respected as Adobe Premiere Pro, but I want to learn Avid, and so I've been trying to download. There's something called Avid First, which is a sort of a nerfed product, but it is free, and so I've been checking that out because the actual Avid costs quite a bit of money to purchase. So let's take a look at Drudge Report and see what else is in the news. I guess it's all Omarosa right now. A lot of sort of political stuff dominating the news cycle, as it has been for quite some time now. As earnings week continues. Now, I want to encourage you to check in tomorrow. Well, let's see. I had this big interview day, which was supposed to be last Thursday, and it really didn't work out because there was a flash flood here. So I had my guest, and I was talking to him online, and I ended up having to, my internet went down for the hardwire feed, but not for my cell phone for some reason. So I had my cell phone tethered to my laptop, which was hardwired to my PC, and I had a signal for a little while, and I was able to record about a half an hour of my interview with Mr. Don Kaufman from TheoTrade, and we're going to continue tomorrow with the rest of the interview, and I don't want to present it to you until it's in its full form, but rest assured it's very interesting stuff. I'm a huge fan of Don Kaufman, and I learned a lot from talking to him. We explored his time at at Thinkorswim and before, and hopefully tomorrow we'll get to talk about some positions and things. I know that, like Tom Sosnoff, he likes to lean short, so he's probably doing pretty well the last day or two with his position. So excited to have him on tomorrow, and my other interview, which got rescheduled also this week. So exciting stuff going on this week. I appreciate everybody watching the Seth Golden interview, and I'm going to keep them coming. I did want to come on today, though, and just give you sort of an update of the short vol show and talk about positions. So let's take a look for a second here at what I've got going on for positions. Well, currently I am long this Facebook vertical, which has sort of gone against me the last couple days. Facebook's been down several sessions in a row, but I'm hanging tough with it. Like I say, I feel encouraged that Facebook seems to be holding up okay with the market down. E-minis down 12, and Facebook's still green on the day, so I see that as positive. But kind of just hanging out with some pesky deltas in Facebook. But I had the SEP 185-200 call vertical, and what I did actually today was I rolled it out to October. So instead of having 38 days left, now I've got 67 days left. So I've doubled the time period for it to work for me, and that makes me feel more comfortable with the trade. Meanwhile, Tesla, I was looking at Tesla volatility today. It's in the 50s, been moving all over the price. This is a crazy stock, definitely. We talked a little bit about these time verticals. Now, if I had just kept the time verticals on, they would have made me money, but it would have been very hard for me to, I had the SEP August 345 call calendar spread on. So I bought the SEP 345 call, and I sold the August. I think it was the August 24 345 call. And so if we model it here, what I did was I clicked on the offer for the one call to buy it, and then I held down control and clicked on the bid for the other call to sell it, and that brings up my screen here, which I'm right in front of. So let me move to the side here. And brings up my screen here. Now this is an order entry screen because I'm in the trade tab instead of analyze. So I'm going to go to the right here, and I'm going to right click, and I'm going to select analyze trade. That's going to bring me into the analyze tab here. I'm going to pull up this area because I see I have more than one trade in here. I'm going to erase the other one I was working on. And so here we have this SEP August 345 call spread. So each time you do this, it's going to cost you $900 and you'll collect $27 a day in theta. However, this thing moves around like crazy, and so you have to kind of roll with it a little bit. I know if I had this on before, and when the stock got up to I think 387, so if I type 387 in here, wait, I'm going to put that here actually. Sorry, not plus 387. Let's say 385. Okay, up that high, I was short 82 deltas there, so losing $80 each bucket moves higher. So, you know, I would have been I would have lost about $1,500 on that move, and I would have probably been reaching to somehow defend my position, whether that be to take it off and change strikes, or that's probably what I would have done. I probably would have taken off the calendar spread, and I would have put on a calendar spread at a higher strike, maybe like the 370 strike or something. But as it turned out, the stock came right back, so right back down again. So many times this happens with when you're short options, is that if you just did nothing, it comes back and you would have been fine. But it can be hard to have the self-discipline to just hold on like that and do nothing. So so here we're modeling doing this SEP August 345 call calendar spread. If we did it 8 times, that would be about $7,500 to put the trade on. You would collect about $219 a day. Up here, you're short a little delta. Obviously, it's centered around the 345 strike, so at 345, you'd be pretty flat delta. Below, you'd start to get longer delta. That's sort of the way it works. The way I have it set up here, these calls only have 11 days to go, the ones you're short, so you'd really like it to be at 345 or close to 345 in 11 days. And I would probably look to, if I put this trade on, I would probably look to roll these August calls out after a few days, maybe next, maybe on Friday or something, roll these out a week or two, collect a little bit, put a little bit more money in your pocket, and keep it going. Because I don't want to get too close to expiration. Otherwise, it becomes, the delta situation becomes too extreme. Meanwhile, let's see. Let's take a look at earnings stuff for a second. I'm going to go to earnings whispers. And we have NVIDIA coming up on 8/16. So today, let's see, we've got YY. Verifone. Let's look at tomorrow. Home Depot, Boson. Let's take a look at Boson for a second. This is one where I was long it from $8 to $9. This is a Chinese company, and they're sort of kind of like a fancy Spotify. It's a company that will take bigger companies and set up websites for them to sell products in China. And stock's been all over the board. Let's take a look at the chart here. And I've sort of followed this one through a couple earnings cycles, and they've had some earnings misses where the stock just fell apart. Like you can see, November of last year, earnings stock fell apart. I'm not sure if I don't even think it was an earnings miss. I think that earnings was almost in line. I can't remember what earnings was, but either way, it just tanked. The one before it tanked also, and then the next one after that, it gaps up. The earnings after that, pretty much, it gaps up and then continues to rally. And since then, it's been very turbulent. You can see this up to 67, back to 51, back to 65, back to 51. So all over the board, this one. Like I said, I was interested in this one when it was trading like $8, $7. That was a few years ago. And I wish I'd kind of held on because I was into it back around in 2016. Let's take a look at the volatility in Boson. I'm going to look at implied volatility at the money. So let's take a look at September. 67 vol. So the August straddle. Okay, so this is interesting because earnings are like tomorrow. So the straddle stock's around 51. So let's look at the 50 straddle. 50 straddle is $6.35 bid at 7. So straddle's like about 650, let's call it. Makes sense, but this could blow either way through the straddle. I mean, it could easily be down 10 or up 10. So it's not really one I don't think I would want to sell. You could look. So volatility in September is around 67. Let's go to the Analyze tab and see how that looks. What percentile that is. So if we go into option statistics under our Analyze tab here, we can see current vol is in the 55 percentile and historical volatility is in the 11 percentile. So it's saying it hasn't been moving around a whole lot, but when you look at the chart, it kind of looks like it has been moving around a lot. So that's kind of sort of deceptive. It's not one I really want to sell because I think it can make a big move, one way or the other. So I'm not going to play this, but I am going to watch it on earnings and just see what happens. If I had to guess, I would say at some point it's going to return through the 60s. So maybe there's a call vertical that might be of interest to some people. Let's take a look. So SEP 5560 call or 5060 call vertical. So you could pay $4 for the 5060 call. And obviously you break even at 54. Right now we're around 51.5. So you need up 2.5 to break even. And that seems like a decent vertical. I kind of like that one. September 50-55 call spread. So you buy the 50, you sell the 55. I was looking at a different, I guess I was looking at the 50-60, but this one, you buy the 50, you sell the 55, you pay $2. And if this thing's above 55, you double your money. Doesn't seem bad. The only thing that would make it bad is if this thing just tanked on earnings and was down $10, trading in the 45 or something, then you're toast and you lose your $200 for spread. Let me widen out this chart for a second. Let's take a look at this again. So So bad earnings. This could go easily back to 40s. It's hard to tell. It's definitely made a move down, but let's see about a call vertical. What about if we looked at the 55.60 call vertical? Let's take a look at that. Or even we could even look at the front week, because it's going to make a move on earnings. Well, it potentially can make a move on earnings. What about the 55.60 call vertical? So if you bought the 55, 210, and you sold the 60. So $1.25 to make 380 if it goes to 60. Seems to be kind of fairly priced to me, that vertical there. So I don't love it. What about the 50.60? Well, how about to the downside? So if you think they're going to miss, you could buy the 45.40 put spread. So you buy the 45 put, 85 cents, and you sell the 40 put. Hold on. Buy the 45 put for 85 cents, and you sell the 40 put against it. So you pay 60 cents for this $5 spread, and if it really tanks, you can collect $4.40. So that's probably the trade I like the most here, is a play for the big down move. So you pay 60 cents to possibly make $5. That doesn't look bad to me. But I won't play this one. I don't really have too much of a decision. Options prices seem to kind of make sense to me where they are here. Anyway, so that's just a look at a couple things. Thanks for watching today. Like I said, I haven't been doing the show as regularly because I've had interviews and stuff, and I have another interview tomorrow, and I know you guys like that stuff. So, so join me tomorrow for the interview, and good luck with your earnings the rest of the week. The E-minis continue to go lower, trading 14.25 right now, with Facebook still kind of hanging in there. Go Facebook, hang in there. Thanks for watching. I will see you in the next one.